Welcome, Money Guy family. It's your host, Brian Preston, back with another episode of Ask the Money Guy.
That's right. You have financial questions. We've got your financial answers. You can go to our website, moneyguy.com. You can leave a comment in the comments below, or you can go to your favorite social and use the hashtag #AskTheMoneyGuy.
It's Brian Preston, the Money Guy.
Today's question, Brian, actually comes from social. It comes from Facebook, and this is from Alice Martz, and she says, "Hey guys, I hear you talk about health savings accounts. Is there another way to get an HSA if your company does not offer it?"
Oh man, how we love HSAs. First of all, health savings accounts, the reason we love them is because it is a brother from a different mother to Roth IRAs, meaning in the fact that you get tax-free growth. But it's better than Roth IRAs in the fact that it's also what we call triple tax advantage. Right. You get a tax deduction, which Roth IRAs do not get. You also get tax deferred growth. And guys, if you use this thing for qualified medical expenses, it gets tax-free growth. That is the triple tax advantage, which is a huge benefit. So everybody wants these things. We are out here hyping it. So it makes sense that a lot of you guys watching are thinking, I got to get in on that action. But I want to caution you. The short answer is yes. Now, but that's not where the show is going to end.
Yep.
A lot of you guys are likely in employer-type plans. And if you are an employer plan, it's likely heavily subsidized. I mean, I know laws here in Tennessee, and this might even be elsewhere, 50% of the premium, if you're doing a group plan, is paid for by the employer on the individual. So that's the first thing you need to understand before you just take the answer of yes and go try to open a health savings account, because there's actually some analytics and requirements that go into a health savings account too.
In order to be able to participate in a health savings account, your health insurance that you're under has to cross a few guidelines. You must be covered under a qualifying high deductible health plan on the first day of the month. You can have no other health coverage except what is permitted by the IRS. You're not enrolled in Medicare, TRICARE, or TRICARE for life. And this is one that most people don't realize. You can't be claimed as a dependent on someone else's tax return in order to contribute to a health savings account.
So when I hear the term high deductible health plan, that usually means a higher deductible.
Sure.
But what's the actual numbers that is listed out there?
Yeah, so in 2020, in order to qualify as a high deductible plan, the single individual deductible needs to be at least $1,400, and the family deductible needs to be $2,800 to qualify as a high deductible plan.
But I got to tell people, be very careful, because we've seen plans. We had a client call in a few years ago and said, this is the deductible, but there was just a few provisions. Maybe it was out-of-pocket limits or other things that just kept it. It was $50 from qualifying. Sure. The biggest thing that you need to look for, does the plan say it's HSA eligible? Even if you're buying things on the exchange, they will have where you can even search, or they have had this in the past, where you can search to make sure the plan you're looking at is HSA eligible. And that's an important thing to look at. And some employers actually offer HSA as an option.
That's right. So once you have determined that you can qualify under a high deductible plan for an HSA, the question becomes, okay, well, my employer doesn't open one up for me. They don't fund it, but I'm in this thing. Can I go somewhere else to open the account? And the answer is a resounding yes. So long as your plan qualifies, you can open up a third-party outside health savings account.
Yeah, and a lot of times this stuff is going to happen. Even if your employer offers a high-deductible plan that's HSA eligible, you're going to go use something. I know one of the bigger players is just come on the scene, Fidelity Investments. Yep. You got HSA Bank. I know I've used the HSA Authority in the past. Health Savings Administrators. All these things are viable options. But the big part is making sure you understand how this integrates with your health insurance plan, because there's a lot of gray questions there that you have to check the boxes on to make sure you're doing this right. But overall, health savings accounts are just incredible tools towards financial independence.
So if you are someone out there who's looking to go use a health savings account, make sure that when you're looking at the different providers, you get the provider or use the provider that has a plan that's structured the way that you use it. So maybe it's one that doesn't have minimum balances, doesn't have account transfer fees, doesn't have high investment expenses. However you use your HSA, you want to make sure the provider you use is the most affordable, efficient option for you.
And also make sure only 4% of health savings accounts out there actually have long-term investments in them. So make sure you are using these things to be the maximum value they can, because not only are they great tools for paying for healthcare costs even in retirement. But these things are actually closeted retirement savings accounts because the government gives you an option post 65. You can actually use these things for retirement expenses. You do have to pay some income taxes on gains because it's not for qualified medical, but still really valuable tool in your arsenal of financial independence tools to walk you there.
Alice, this was a great question. If you have a question out there you'd like for us to answer it, you can go out to your favorite social, use the hashtag #AskTheMoneyGuy. You can leave a comment in the comments below, or you can go to our website, moneyguy.com.
And Money Guy team, out.